Welcome to Uncovering Trusts, a podcast by the Edison Group. I'm your host, Will Manuel, and today I'm joined by Milosz Papst, Director of Investment Company Content at Edison, who will talk about HgT. Milosz, thanks for joining us today.
Hi, Will. Glad to be back.
Good. So while Edison has been covering HgT extensively for years, maybe you can start with a brief introduction for those listeners who are less familiar with the trust.
Yes, of course. The first thing our listeners should know is that HgT is a private equity investment company which invests in leading, profitable, unquoted European mid-market businesses with an international footprint, offering mission-critical, low-spend software solutions to small and medium-sized enterprises. It is managed by Hg, Europe's leading private equity technology investor, and provides public market investors with exposure to Hg's portfolio of over 50 such holdings, representing around $180 billion in aggregate enterprise value. Therefore, HgT provides high-quality exposure to the corporate digitalization theme, supported by the structural demographic trend of a declining working-age population, which drives up labor costs in developed countries and, in turn, stimulates software adoption. Importantly, the trust's portfolio offers a combination of a high share of recurring revenues based on software-as-a-service subscription models and high customer retention. Hg's sweet spot lies in defensive tech growth companies operating in one of 8 core end markets: tax and accounting, ERP and payroll, legal and compliance, automation and engineering, insurance, SME tech services, fintech, and healthcare IT. HgT has historically delivered revenue and EBITDA growth of around 20 to 30% per year, at a margin above 25%. Across its top 20 holdings. Therefore, it fulfills the so-called rule of 40, which is, well, a rule of thumb, but based on empirical evidence, saying that software stocks with combined revenue growth and EBITDA margins of 40% or more typically generate higher valuations.
Okay, thank you. That's a very good high-level summary. So during our discussion before the recording of this episode, you suggested that we delve deeper to give our listeners a good flavor of how an HgT portfolio company looks like. So HgT's largest holding at the end of June was Visma, but given you've covered it in more detail in one of your research notes earlier this year, and that Visma should enjoy good coverage ahead of its anticipated IPO, maybe you can talk about other major portfolio companies at HgT.
Yes, sure. I would start with IFS, HgT's second largest holding, which made up close to 10% of the trust's end June portfolio, and which is a provider of cloud enterprise software and industrial AI applications across multiple sectors, including ERP, enterprise asset management, field service management, and enterprise service management for asset-heavy industries such as aerospace and defense, energy utilities and resources, construction and engineering, manufacturing, and telecoms. It generated annual recurring revenue of more than 1 billion euros in 2024, up by a strong 32% year over year. HgT indicated in its interim 2025 report that IFS continues to increase revenues through its focus on transitioning from perpetual to multi-year term licenses with double-digit organic growth. The company serves more than 5,500 customers, with over 350 added in 2024 alone.
Okay, thank you. And you've mentioned industrial AI applications, which sounds interesting. Can you say something more about this?
Yes, of course. The company's IFS AI platform, which is part of IFS Cloud, combines a data foundation layer and a governance and orchestration layer with business process automation and optimization, and an AI-powered user experience, which includes a copilot feature. IFS AI is used by the company's clients to manage critical assets worth $2.4 trillion. What I found particularly interesting is a comment made by Satya Nadella, chairman and CEO of Microsoft, included in the 2024 annual report of IFS. He said, quote, IFS AI is, I think, fundamentally going to be transformative in giving any industrial setting that next leg up, not just in the core manufacturing processes, but in all the knowledge work that happens alongside manufacturing. End of quote. Microsoft is IFS's partner, and IFS Cloud is deployed on Microsoft Azure and sold via the Azure Microsoft commercial marketplace.
Okay, nice. Thanks for this useful background. And how long has HgT been invested in IFS?
Yeah, so HgT first invested in IFS and Workwave, a sister company providing vertical software within field service management, primarily in North America, in July 2022, when it became a significant minority shareholder alongside EQT as a majority shareholder and TA Associates as a significant minority shareholder in a transaction which valued both businesses at a combined $10 billion. HG recently doubled down on its investment, with HG funds making a follow-on investment in the first half of 2025, with HGT alone deploying 120 million pounds. This brought the total equity stake across all HG funds in IFS to more than 45% at the end of June, compared to 29% at the end of 2024. IFS was the top contributor to value accretion across HGT's portfolio in H1, with a 41 million pound increase in value, equivalent to around 26% of the end 2024 carrying value, and was also among the top contributors in 2024.
Okay, thanks. That's helpful. I believe you also wanted to cover personal and informatic, or P&I, today.
Yes. P&I is a business with a long heritage dating back to 1968, and which was HGT's fourth largest holding as of the end of June, making up around 6.6% of portfolio value. It is a provider of an integrated HR cloud platform to SMEs, primarily in Germany, but also other European countries. Its current base covers more than 15,000 customers, so it is quite fragmented, with particular exposure to the more resilient public sector and upper mid-market segments. Its service scope covers payroll, core HR, human capital management, time and attendance, as well as analytics. Interestingly, its cloud platform is hosted by P&I's own HR data center, with all the hardware, technical hosting services, data security measures, etc. The company has also launched an HR as a service solution with full responsibility of the system's technical administration, processing of all payroll-related transactions, and payroll accounting. In the last financial year to end of March 2025, P&I delivered revenue of more than 300 million euros, of which 85% is recurring, with organic growth of nearly 23% year on year. Now, HG highlighted in HGT's interim report that P&I continues to develop positively, driven by its ongoing transition to a software as a service model, which is a common feature of HGT's investments, and an acceleration of new customer wins on the back of further product innovations. HG highlighted that the shift to a term license model drives higher cash flow visibility for the business. As a result, P&I was HGT's second largest value driver in H1, with an increase in fair value of close to 35 million pounds, or 33% compared to the end 2024 carrying value. HG's value creation agenda for P&I includes the stimulation of value-based upsell of existing SaaS customer base towards new AI-driven product suites, extending well beyond payroll. It also wants P&I to invest into the sales organization to drive new logo wins, sees a further margin uplift potential from operational leverage as the business scales, and also believes that there are good M&A opportunities.
Right, thank you. And so what's HGT's history with the company?
HGT first invested in P&I back in 2013, so a while ago, alongside HG Capital 7 Fund in a take-private deal. The HG fund then sold most of its holding to Permira, generating a strong 37% IRR over a 3-year investment period, but retained the minority stakes. Subsequently, it again increased its stake in 2020, becoming a majority investor, and then bought the remaining minority stake from Permira in H1 this year, bringing its stake to around 88% as the end of June. As part of the H1 transaction, HGT invested 115 million pounds, which was coupled with around 50 million pound proceeds from a recapitalization of the business, so resulting in a net investment of roughly 65 million.
Right, thank you. So I believe regulatory and compliance software is also an important theme these days. And I think HgT highlighted in its interim report that the market is worth over $30 billion globally. Is this theme represented in HgT's portfolio?
Yes, it is. One of HGT's top 10 holdings at the end of June is Ideagen, a provider of compliance software to organizations operating in highly regulated industries such as life sciences, healthcare, banking and finance, and insurance. The company has a global footprint across the UK, US, Middle East, Australia, and Southeast Asia with more than 13,000 customers. HgT invested in Ideagen in July 2022 as part of a take-private transaction, so similarly to P&I, carried out via the Genesis 9 and 10 mid-cap funds. A few months later, Ideagen was merged with ProcessMap, a provider of environmental health and safety software. AG highlighted back then that both companies have complementary product suites and a diversified regional cover. According to AG, Ideagen has a good track record of delivering strong organic revenue growth with continued margin expansion while delivering accretive and strategic acquisitions. And trading last year was robust as well.
Okay, thanks for that detailed rundown. So I noticed that the three companies we've covered so far, those investments were made by HgT a few years ago. Can you cover or give us an example of a more recent investment as well?
Yes, with pleasure. I think that AuditBoard is a good example, as HgT invested more than £100 million in the business in July 2024. It is a modern cloud-native connected risk platform, changing the way enterprises automate, collaborate, and report in real time on risk, audit, and compliance workflows. AG highlights that the business sets itself apart with a customer-centric approach and a combination of innovative technology and domain expertise. It serves a fragmented client base of more than 2,500 enterprises, including more than half of the Fortune 500 companies. 95% of its revenues are recurring, with annual subscriptions and average contract lengths of 3 to 5 years. AG sees significant M&A opportunity for the company, given the high fragmentation across vendors and customers.
Okay, and what's HG's plan with respect to its investment in AuditBoard beyond M&A?
Yeah, so AG outlined several value creation levers and projects for AuditBoard. Firstly, product innovation and cross-sell of newer products. Secondly, margin improvement via operational initiatives across hosting, R&D, sales and marketing. Thirdly, value-based pricing and packaging improvements. And finally, international expansion. In the H1 report, HG highlighted that AuditBoard has continued to perform well, sustaining double-digit organic growth while achieving meaningful margin expansion and scaling operations globally, and that the company finished H1 ahead of budget on top-line growth and EBITDA. It also underlined the recent launch across the DACH region.
Right, great. So I think these case studies have provided our listeners with a very good understanding of what type of companies HgT invests in. The trust recently announced its final results for the first half of 2025. Can you briefly elaborate on this as well?
Yes, of course. HGT reported an 0.4% NAV decline in total return terms in H1, which was negatively affected by public market volatility we've all seen in the first half of the year. However, this represents a sequential rebound in Q2 following the 2% NAV fall in Q1. Last 12-month revenue and EBITDA growth to end June across HGT's portfolio was a strong 19% and 18% respectively, contributing a positive 8 percentage points to its portfolio valuation in H1. Now, AG's head of research highlighted that customers are focusing largely on mission-critical software and established vendors at present, which suggests tight control of IT budget and a tougher macroeconomic backdrop. And he said that this is consistent with their own experience with the AG portfolio. He also highlighted that winning new customers is challenging at present, though I would note that most of the revenue growth across AGT's portfolio companies normally comes from cross and upsell to existing clients. Importantly, HG starts to see a stabilization in the broader software market, which suggests an improving trading momentum into 2026. AG also highlighted that its continued investments in AI capabilities and the expansion of its serial share program positions AG well to capture the significant opportunities ahead, particularly as agentic AI moves from potential to productivity in products that are offered to customers across AG's portfolio. In terms of transactions, HgT's gross realization proceeds reached £165 million in H1, so around 7% of opening NAV, which according to AG compares favorably with peers in a challenging environment. Investments, including reinvestments, stood at £306 million or 12% of opening NAV.
Okay, thank you, Milosz. That was a very interesting rundown on this specialist tech investor. You've been listening to Uncovering Trusts, a podcast by the Edison Group. If you want to find out more about HGT and other investment companies we cover, please visit www.edisongroup.com.